Welcome to Talk Tickers, where we break down the market's biggest head-scratchers. And boy, do we have one today. We're diving into Jabil, ticker JBL, and their latest earnings report. See, on paper, they absolutely knocked it out of the park. But the stock's reaction? Well, that was a totally different story. So let's get into it and figure out what is really going on.
And this right here, this is the heart of the puzzle. Jabil delivered what's called a beat and raise. It's exactly what investors want to see. They crushed the current quarter's expectations and then raised their forecast for the future. And for a little while there, in pre-market, it looked like the stock was going to the moon. But then the market opened. By the end of the day, Jabil was down almost 2%. So what happened? Why did such a fantastic report just fizzle out?
So we're calling this story the beat and the fade. First, we're going to look at those awesome numbers, figure out what's driving all that growth, and then we're going to solve the mystery of that sell-off and talk about what it all means for the stock going forward.
All right, first up, let's look at the numbers that should have sent this stock soaring. Core earnings per share came in at $2.85, easily blowing past the consensus estimate of $2.70. And then you look at revenue, $8.3 billion, when Wall Street was only hoping for about $8.09 billion. I mean, these aren't just little squeakers. This is a clear-cut, solid beat.
And believe me, the good news did not stop there. Their revenue grew by almost 19% compared to last year. They pulled in a really healthy 5.5% operating margin, generated over $250 million in free cash flow, and they returned $300 million to shareholders through buybacks. So you see, this isn't just a growth story. It's a story of smart, efficient, and very profitable growth.
Okay, so what's really under the hood here? What's fueling this impressive growth engine? Well, it turns out Jabil has put itself right in the middle of one of the biggest tech trends on the planet. Let's take a look. The undisputed star of the show is their intelligent infrastructure segment. It pulled in a massive $3.9 billion this quarter. Now, this is their business that handles things like cloud, data centers, and networking. And it is just firing on all cylinders. The other segments are doing fine, but make no mistake, this is the engine that's really driving the company forward. And the magic word inside that engine is, you guessed it, AI. Management is so bullish on the demand for AI hardware that they just jacked up their full-year AI revenue growth forecast. They went from 25% all the way up to a staggering 35%. And remember, this is just one quarter into their fiscal year. That's a huge boost of confidence.
So what does that mean in actual dollars? Well, we're talking about an expected $12.1 billion in revenue just from AI-related business this year. Yeah, this isn't some little side project for them. This is fast becoming the very core of Jabil's entire story.
So you might be asking, how are they actually doing this? How are they capturing all this demand? Well, Jabil's playing it smart. They're building out a complete full-stack solution for AI data centers. They don't just sell one part. They handle the whole shebang. The server racks, the power systems which they beefed up by buying Hanley Energy, the supercritical liquid cooling, and all the networking that ties it all together.
And, you don't have to take my word for it. The CEO, Mike the Store, laid it out pretty clearly. He talked about taking a holistic view of the data center, investing heavily in the engineering side of things, especially in new tech like liquid cooling. By doing this, they can give their customers a complete, integrated package that gets them up and running with AI faster and cheaper. That right there, that's a huge leg up on the competition.
Okay, so a great quarter is, well, great, but what about the future, right? That's what the market really cares about. And let me tell you, management sent a very clear message that this momentum is here to stay, and they put their money where their mouth is.
They raised their guidance for the full year across the board. They bumped up their revenue expectation by over $1 billion to $32.4 billion. They're guiding to even better profit margins now at 5.7%, and they boosted their core earnings per share forecast by a hefty 55 cents to $11.55. This is not a small tweak, folks. This is a massive signal of confidence.
Which brings us right back to that big nagging question. With a blowout quarter, mind-blowing AI growth, and a huge guidance raise, why on earth did the stock close in the red?
And here, my friends, is the answer. Context is everything. You have to look at what the stock did before the report came out. It had already surged an incredible 48%. The market hadn't just priced in a good quarter, it had priced in an absolutely perfect, flawless quarter. So when the great news finally hit, it was a classic case of sell the news. All the investors who rode that massive wave up decided it was time to cash in their chips.
All right, so that explains the weird price action. But that's history. Now we gotta look forward. And that brings us to our final segment, the next call, where we give you our take on what to expect from here.
And this is really the million-dollar question now, isn't it? After that post-earnings dip, did all the hype get washed out? Did it create a fresh buying opportunity in Janie?
So let's break it down. The bull case versus the bear case. The bulls have a lot to be happy about. Jabil is becoming a powerhouse in AI infrastructure. They just raised guidance, and they're making smart acquisitions. The bear case, though, is more about the market itself. You've still got that sell-the-news vibe hanging around. The stock is still up over 60% from a year ago, and there's always a risk they could stumble a bit as they retool their factories for all this new technology.
So after weighing all of that, our rating on Jabil is market perform. Look, the company's fundamentals are rock solid, and that long-term AI story is incredibly powerful. But after a run like the one it's had, we think the stock just needs to take a breather. It probably needs some time to consolidate and digest these huge gains before it's ready to make its next big move up.
And just so we're all on the same page, what does market perform actually mean? It means we expect Jabil's stock to deliver returns pretty much in line with the overall market, say the S&P 500, for the next 6 to 12 months. It's definitely not a sell call, it's just a way of saying the easy, fast money has probably already been made for now.
All right, and before we wrap up, the usual and very important reminder, the information we talked about here today is for educational and informational purposes only. This is not financial advice.